What is going on YouTube? It's Brendan from Market Makers. My God, I love making YouTube videos. This is so much fun. Some of the big YouTubers that just recently, as in a week or two ago, had thumbnails saying Bitcoin going to 60K, Bitcoin going to 40K, are now putting out thumbnails saying, oh my God, Bitcoin's going to 3K. So, guys, you guys know me. I am the long-term bear. I'm the Kodiak bear in this space. Been talking about the downfall since the all-time high, marrying it to market cycles, marrying it to the Shemitah, talking about the macro with inflation, the bubble cycle that we are trading in. But guys, I am becoming more and more convinced, and this may be shocking to some of you. You may choke on your popcorn watching this video, but I'm becoming more and more convinced we got that wave up coming. And let me explain. Let me set the table for you, okay, before we sit down and eat. So the strongest part of the stock market, the strongest seasonality of the stock market, which came to be known as the Santa Claus rally, is the last trading week in the month of December and the first 2 days in January. Now, we have that holiday, that last trading week on Monday, so that could be the first 3 days of January with that 4-day trading week there in the last week of December. That's the strongest 7 days in the stock market going back all the way to the Great Depression. You guys know I track patterns, I track cycles. This is very interesting to me that that's the strongest days. And I want to show you the patterns that we have. And you may look at this now after you watch this video and say, you know what? Brendan may be on to something here, and you guys are going to thank me if I am, because of course we have Dante's descent on the Russell on Bitcoin, where we're going to slap on some fat trades when we hit these resistance levels. I'm going to show you here on the charts. Guys, this video will be brought to you by SimpleFX to trade all the equities, commodities, Forex, decentralized broker, and they have Bitcoin and some cryptos as well. They've been a fantastic sponsor. Lots of people are switching over there because it is decentralized with segregated accounts. Your money's in cold storage. Details in the video description. But if you want to trade spot, if you want to trade the full array of cryptos, our long-term first sponsor is BITGET. Everybody has BITGET now as a sponsor. But guys, BitGet is on there as well. If you want to support this channel, check out their link in our video description. It does support us. And our sale ends at the end of the month, guys, to join our Discord room where you have trade signals, full-on education. Just put up a great pattern video Sunday for the Discord exclusive membership. If you want to join, it's $20. Download Discord. Click the link in the video description. My Twitter's there too if you guys want to follow me. All right, guys, let's jump into the charts. And let's talk about this really quickly, because this is really important to understand. The market's bearish. I'm a bear. I'm the one that gives you the baseline of 2023. At a minimum, I'm looking at the S&P going down by 50%, because historically, last 3 bubble cycles now, that's what it's done. The last 2 bubble cycles, specifically in the last 20 years, Y2K, Great Financial Crisis in '08, that is what it's done. It actually exceeded 50%. But that's at a minimum where I'm looking at this going. The S&P is now down 20%. So Bitcoin is going to drop. You guys know I've made you those videos. Watch my Bitcoin Big Short video from a week or so ago. I show you the ultimate targets down there, 3,500, 4,600 in that range. That's where I'm looking for Bitcoin to go. But before we do, I do believe this wave up is coming. I'm going to show you in the charts. First, let's start on the weekly. Before we even get to Dante's descent and our pivot points, look at the weekly. Clearly trading in a descending channel, okay? Now, let me show you this, because you're in a descending channel. And if we go ahead and look at this, looking for these touches here, okay? Here's our wave, our impulse up. Now we're in the channel, tagging all the places we're actually hitting this channel. I think we're coming up, guys. I don't think it's a coincidence that there's no coincidences in pattern trading. I don't think it's a coincidence that I have that January 3rd date on the daily time frame. Here on the weekly, it's January 2nd. That January 3rd date and Dante's descent for Bitcoin to make a top. Because look where the channel top is. And that's right at about 19.1, 19.2 when you're looking at this, or 18.7 to 19.2, depending where you go in this channel. And if you look at this, this also gives you your 5 touches, your 1, 2, 3, 4, 5. So oftentimes in these geometric shapes, and channels and triangles. You will get 5 touches, and then you'll be having your breakout or breakdown. In this case, it would be your breakdown. So this makes perfect sense. It gives us a target on the channel. You've been respecting this channel, by the way, since August 15th. So I wanted you guys to see this because this is totally lining up, I believe, for a wave up. I'll show you this on the daily time frame as well. So I'm probably the only long-term bear, the Kodiak bear, giving you a wave up before a wave down, because it's all about entry. When you are doing trades, it's all about entry. All of this is entertainment and education, as you guys know. None of this is financial advice. But let's look at a couple other things here. If we were going to look at this from a pattern trading perspective, and we're going to look at this, we can do an XABCD pattern here. And you can see this as well. I showed this as well in the Discord. But this would have been a beautiful long entry here off of this bullish reversal down here at the 1272. Okay, I do believe this will wave up, and you will see this on the daily time frame, and I'm going to show you guys that. But this is just telling me you're holding this gradient, you're just below it right here, but I think you're going to come up and smack this channel at a minimum because you've done it over and over again going back to August 15th. Now, let's go ahead and jump to the daily. Dante's descent. Why is this pattern important? We've made so many videos on it. I'm not going to keep going over it, guys. But the pivot points in the pattern, giving you this trade at that 48.2, 64% decline. And you guys know we're looking at, sequencing in the market. Every box, remember on the weekly time frame, these are 20 bar boxes. We drilled it down, or I drilled it down to the daily. January 3rd should be that next top and then drop. But these bottoms that you make in the boxes, 46% up move off that bottom. This one's going to be what, like a 43% up move, just off the top of my head. Just about 43.42%. If you look at this on a daily, and I know it's small, okay, but I'm doing that on purpose so you can see the difference in these moves. We're saying this is the bottom, and that potentially is the top. Where all the people on crypto YouTube are getting super excited about this little drop here, and see you at 8K, see you at the bottom. I don't think that's the top, guys. You look at these wave movements up off the bottom. This is just a little splurge, and it's so small. As a matter of fact, it's probably what, 18-20%. 18.74%. So do I think it's going up necessarily to like another 40% wave? Nope, it doesn't have to. But it is terminating on January 3rd, which again would be finishing the strongest week historically in the stock market going back to the Great Depression. So if it did get up to that 40, let's say 42, 43%, you're looking at 22K Bitcoin. Could it get there? It could get there. But let's look at our targets. Here's our pivots carried over from Dante's descent. Now, a couple ways I want to do this with you guys. Let's go ahead and do this. We can take our larger trend-based fib to do this, okay? Larger trend-based fib. Hit the 382. Remember that 19.1 number right here on this larger trend-based fib is the 19,175. That will be the top of that weekly channel, 19,179, okay? And if we look at this a couple of different ways, once again, this is the trend-based fib. We can go ahead and take a fib retracement on this more current wave structure from that high to that low. You guys know I'm looking for fib confluence. Look at your 618 laying right on top of it. And of course, you also have the marriage above it here at the 20,187 with the 200 coming down. And then you have another double fib confluence. Again, look at the two different size waves here we're measuring, guys. You got a lot of fib resistance here for potential targets, but at a minimum, I think you're getting up to that 19,186 level. And I'm going to show you this in some patterns as well. Now let's take off that trend-based fib. Let's just do our fib retracement once again off this wave, and let's do a smaller trend-based fib. We can do a smaller trend-based fib, and what I'm looking at here is a pattern, okay? I'm looking at our Gartley vibration or my chameleon vibration, and I'm looking at an A point down here, and I'll draw this out afterwards. I'm looking at a B point, and then I'm looking at the pullback, if this pullback holds. And then I'm looking at the confluence once again for this smaller projection. This 618 at 19,186 keeps coming up over and over again in this tighter wave projection. So the larger wave projection, we do have these targets that can go higher up with double Fibonacci confluence, but even on the smaller wave, I'm looking at the 19 19.1 target once again, the top of that weekly channel. The 200 is descending. How quickly it will get down to that level right here, we shall see. Then 19.150, 19.200. We shall see if it can get down there by January 3rd. But I mean, look at the trajectory. How beautiful. I mean, seriously, if you guys appreciate TA, which I think most people that watch this channel do, how beautiful would this be if you continue this diagonal descension right into our pivot point, right to that 19.1, right here. I can't draw a straight line. I am not Bob Ross or MC Escher. I cannot draw a straight line, but you can see what I'm saying here. If this comes down right to this point, the pivot point meeting the one, I mean, that would just be absolutely gorgeous. And I hope all of you guys that, you know, do make life-changing money from watching this channel do consider, I like Lamborghinis, I like Ferraris. I don't own any of those things, but depending how big of a whale you are, you know, I would not be upset with you if one showed up in my driveway. So let's look at some other confluence that we have here. I want to show you guys this because, you know, here's our vibration pattern that I was talking about. And if I go ahead and draw this down, your X to A impulse up to our B, down to our C, and looking at our D point right there at that 19.1, basically gives you 618 retracement of your X to A impulse. Okay, so 618 retracement. And again, as I showed you before, if we went ahead and did the full fib retracement with that double confluence, once again, coming back down here on this wave, you're right here, okay? And that 786 is up there at 20,196 with the 200. I think you're going to come back up here. This makes perfect logical sense. I don't think this wick was high enough. And the fact that this was such an obvious shorting point. So many people got in on this, and good for them because they caught a nice trade. But I don't think this is it. Looking at those previous waves, guys, these big moves up, and you could see, I guess you could compare it to something maybe like this, right? Maybe that's what we just did, was this move right here. So you come up off your bottom, you get that move, but really you retrace and then you come back up to a slightly higher move before your big descension. I think you're doing the same exact thing, knowing that the strongest 7 days in market history, going back, 90 years, is still to come. The last week of December, first 2 or 3 days of January, because we have that holiday in December, okay? So that's what I'm looking at for this. And these pivot points make perfect sense to January 3rd. And of course, we have this on the Russell for December 30th as well. But I'm watching this 19.1. And if we get to 200 down there, I'm definitely watching this 19.1. And if you look at Bitcoin, it is making a perfect Gartley pullback here that you want to see for this pattern. We want to see this volume stay low. Here's your A to D leg. We want to see this volume stay low, build up volume divergence, fewer people paying higher prices. Watch this 618, and of course watch the levels above it as we get up here to see if we do make a move to get above it based off that larger trend-based fib. We do have more upside targets, but at a minimum, guys, this is where I'm looking at by January 3rd. 19.1, 19.2. Okay, let's go ahead and open this up and see what we're dealing with here. MFI is about to cross back into bullish. Perfect. You're getting a little wave. You had some wave of selling, still staying up here for buying. ATR is back at the median line, which tells me, let's go ahead and get rid of some of these lines, which tells me you're bottling up nicely. We'll look at this on Bollinger Bands. I'm not a big Bollinger Band fan, but Bollinger Bands. And looking at the Bollinger Bands here shows you the same thing. So you're bottling up. This is based on standard deviations, whereas Keltner channel is based on volatility. I prefer volatility, but this does the same thing. So Bollinger Bands, you can see it squeezing here. When you get squeezes, you get a move. This move is going to be a move up, I do believe, to one of our targets, specifically possibly that 19.1 with this diagonal descension. I mean, this looks perfect. Look at this. This looks perfect. I get all excited about this, okay? This looks perfect for an impact right here. And if we get more bullish, then we have those higher targets, but we'll get to that. We'll have more videos before then, obviously. So that's what we're really looking at here, guys. And if we do the Caterpillar, which is a Donovan Wall indicator, because every now and then people ask me about this, RSVVB. I just call it the Caterpillar. It is a reverse engineered RSI. And if you look at this, you are bottling up on the daily. So I'm looking for that wave up and then the wave down, and that will be the next big move in Bitcoin. And you're getting it only on this channel. Nobody else is showing you this. They're all saying we're done. We're down, we're out, or you still have the crazy nut jobs that are talking about 1 million Bitcoin next year, okay? But those guys, whatever. We got to find a bottom before I can give you guys any predictions, as you know, because I trade off of Fibonacci, I trade off of Wyckoff, I trade off of patterns and market cycles. We don't have a bottom. The market hasn't even got to where close to where it's going to be bottoming, and wait until you see everything unravel in 2023 when that full-on recession hits, okay? Then we're going to be looking at bottoms when everything capitulates. We're not there, guys. We are in trading volatility wonderland, which is a lot of fun to make money on all these trades. And look at these pivots I've been giving you with these trades, 28% there. Let's go and look at the 4-hour. How is this affecting us on the 4-hour? We pumped back above the 200, just got back below it by a couple dollars here. 233 is above you, but again, expect that wave to come up. We have time. The Russell holding its 618 from a simple fib retracement here. I do believe the Russell will also be waving back up, which means the other indices would be waving back up. Let's look at this on the daily. That is Dante's descent. Same 20-bar separation, made its all-time high within 48 hours of Bitcoin. Pivot points on the same day or within 24 hours of Bitcoin. They're tracking super similar, guys. Russell on the daily. Here's that bifurcated box, as you guys can see. And let's go ahead and Russell on the daily with some TA on it. Now, if we look at this, you do have your 50, you're below your 50, below your 200, but let's get rid of some of these lines so these don't confuse anybody. Get rid of that one and get rid of that one. And let's draw some things out, guys. So Fibonacci confluence is key as always. If we're going to look at this from a trend move, we could take this low here up to that high, down to this low if this low holds, and you're looking at some numbers here where you got some resistance at the 618, the 1 fib at 1988 as well. And if we want to pull over a wave projection, you could see this wave from coming up here down to that same low, and you can see that 618 getting double layered up here as well. So that 1884 area is of interest as well. I have the pivot date on the daily for December 30th, so we could be coming back up. 1884 is $140. Okay, so the strongest historical week of the market coming up could easily move $140. We'll see how it plays out. And then patterns that are presenting themselves look very similar to me on this time frame when I'm looking at this, my trend-based fib. Once again, throw a trend-based fib, get my A, my B, my C, and if I want to throw a 5-point pattern on here, could come up from here to our A, to our B, down to our C, and then I'm looking at my D. The 618 would, on this pattern for X to D, would literally be at the 618 on the trend-based fib, roughly 1884. 786 would get you up here at 1930. The market symmetry for this move would bring you up to 1988. Is that possible? I mean, anything's possible, right? Anything's possible, but is it probable? Well, that remains to be seen. So that would be an extreme target in my case, but I would look for a move back up to this 618 fib, at least with all the confluence we're getting for indicators here. $140 move. You could see this happen by December 30th. And again, remember, this date may roll into January because of the holidays. You do have, I think the day after Christmas is a Monday, so you're closed in the market, and then you have what, New Year's Day? I'm not sure if we're open New Year's Day or not. So you could be looking at first couple days in January. So just keep that in mind. But this is what I'm looking at, guys. I'm looking for a wave back up. Again, putting in a beautiful textbook Gartley pattern here on the base. Your XA impulse, your pullback, your retracement up, higher low on the second retracement, and then we're looking for that wave back up, and we want the volume, just like on Bitcoin, to cooperate with us. So those are some targets I'm looking at back for an up move, and this is obviously a key resistance area. That 1880 to 1900s provided you a lot of resistance, and again that 786 at 1930 with your 618 diagonal coming above that. We'll see if you can do that. That would take a lot more euphoria in the market, but we have a lot of tax loss selling going on right now, and that's going to be done done soon. And you're going to see rebalancing in portfolios, rotation in portfolios, and there will be more buying. S&P holding that 486 at 38.24, as you can see. Going over to the S&P on the daily, lost your 50, your 200, 233 as well. Down thrusting in Wyckoff, coming back up, guys. I'm looking for the same moves basically on all of these, okay? I'm looking for the same moves. And if we do this, trend-based fib, come up to that high, come back down to that low. Your 618 at 41.76, your 46 at 40.90, your 32 at 40.22. And then let's go ahead and grab a fib retracement from this larger wave down to here and start looking at where you're laying over here. And you have, they're not on top of each other, but that 4,000 number, obviously a key psychological number in the market, your 200, 233. Possible retracement back up to that level, looking at these levels above it as well. But these are all possibilities of where the market could bounce back up to 40.90, 41.46. You got all the way up to your 200 here. That's the key difference when people were talking to me like, well, we got to 4,300 back in August. Yeah, but you were below your 200. Now your 200's here. So I think your upside, as I've been saying for weeks, guys, on these rallies is capped. And this rebound rally will also be capped because of where your long-term moving averages are now as well. So I think we'll be able to get back up here, get back up to that 4,000 number, and then you're just looking at a difference of $50 to $100 as we look around this range, looking for the markets. Remember, I don't have Dante's descent on the S&P or the NASDAQ, right? So I'm focusing my trading on Bitcoin and the Russell. But these, for people that do want to trade, these are going to be very valid targets, and we'll keep track of these as we get more movement, okay? As we get more movement, we'll definitely pay attention to these. And let's look at the indicators really quickly. MFI obviously is bearish, but you are dripping down into that oversold territory down here, right? And we'll see if we get a bounce back up. And I do expect these to rebound. You have a lot of selling going on, big wave of selling, but you're holding Wyckoff. That's what's amazing, right? Wyckoff's not a fib. Essentially, you're creating a volatility box, and you can see how well it holds up. Up thrust out of the range, fall back into the range, down thrust, come back into the range, vacillate here, down thrust here on this candle. Maybe you'll get a couple more down thrusts, but I think you're getting a rebound back up for the strongest week in stock market history historically. Looking at the NASDAQ, guys, this is all going to be the same. You guys can do this at home with your crayons or on TradingView. And if you look at this, the 618, 11,115. You can see you did come below it here. Looking at this on the daily time frame, again, down thrust out of Wyckoff, same fib, 11,008. Here's the 618. Down thrust came back up. So you look like you're holding key support levels here on all of these indices. So what you want to see, let's go ahead and get an upward projection here. The NASDAQ's really weak, obviously, because of all the big tech, right? And just to come up on this wave, this last wave move here, you've got to get to 11,428. Now you have your, what is that? That's the 50, okay? So that's the 50 right there, 11,428. That's your first hurdle to get back above it. Get above that, then you're looking at 11,563, 11,734, and obviously you have all this resistance. So your 786 will once again probably be your top for me here at 11,951 with your 200 and 233 well above you. But we'll see, guys, because what is today? What is today? Thursday? Tuesday? I don't even know what today is. Hold on, let me look at my phone. Today's Tuesday. Today's Tuesday. So today's Tuesday. So we could have more selling this week. So you could get some more candles down here. You're bouncing off almost on the 1-1. Remember that 45 angle from the pandemic low. So you want to hold this, stay above it, and then we'll start looking at these targets. But the rest of this week, you could just be vacillating back and forth, getting some selling pressure. Next week is when we want to see if we get this wave up, maybe even starting on Friday, right? It doesn't have to be on Monday of that day, or actually that's closed the market. It doesn't have to be on Tuesday of that week, but you want to start to see this wave back up for the strongest 7 days. So we'll see if we get that, guys. I feel like it's coming. I can't speak for the NASDAQ because the NASDAQ is, because of tech, it's just really, if you can get in on shorts, great. But the Russell is more garbage, better shorts, and obviously Bitcoin's volatility, massive earnings potential on Bitcoin. Guys, check out our Discord, check out our trading room. Do like and subscribe to this channel to help support us in the algorithm, which is evil, guys. It's very evil. More people should know about this channel. I think you guys feel the same way. And I'll respond to your comments as always. Guys, look out for Thursday's video. Watch for these waves up as the markets look to kind of hold a bottom with some volatility. I'll talk to you guys in the comments. See you next video. Take care, everybody.